What's going on, guys? It's the Forex Prince James here again, back at it again to bring some more tips and some jewels your way. Today we're gonna talk about two indicators that's real simple to add and real simple to follow, and I'm gonna give you a real simple strategy at the end of this that follows those indicators, so you can start becoming a better trader. And you also, in this with this strategy, you'll learn what trades to take and when to take them. All right, so let's get right into it. All right. If you're not familiar with the MetaTrader platform, I highly advise that you go watch my last video on how to set your MetaTrader up to look like mine, because if it don't look like mine, it's probably a good chance that you're not going to see the same results that I see. Also, let's do a quick disclaimer. Any profits that I have shown you, or any strategies that I have shown you, I haven't told you or shown you anything that is 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 fake or illegal. And most of the information that I'm giving you is for educational purposes only. I do not want people to solely trade off of what I'm telling them. I want you to back test this in your demo account first, and then once you get a grasp of it, then you can go ahead and take it live. Don't just take my words and run with them, because everybody can be wrong just like everybody can be right. So before y'all get the saying that, oh, I made you blow your whole account, no, you blew your own account because you didn't heed the warning I gave you that this is a long game, baby. So let's get right into it. Like I said, I follow the Euro USD pair because the spread for the Euro USD is lower than the rest of my rest of my pairs in my watch list. You can see is at a 3 spread, meaning my broker only wants me to go. He only charging 3 spread for me to go and get in. So we're looking at the Euro USD on a 5-minute chart. And if you see, I got these two little lines here. I got a yellow line and a white line. These two lines together are called exponential moving averages. What they do is they kind of tell you, let me see if I can rotate my whole screen. They kind of tell you where the market is going. All right, and with them kind of tell you where the market is going, they're kind of also tell you what you can trade. All right, what to trade and how to trade. So I'm gonna go in and I'm gonna take one of these indicators off. I think it's that one, and it only leaves that one. Okay, so that yellow exponential moving average is called a 200 moving average. All right, and it gets its data over the last 200 moving pips, like 200 candles. That's what I meant to say. Over the last 200 makes this line. All right. So let's go ahead and let's just jump right into it. So how you set that up is you hit the little F, and it takes you over here. You hit the little blue F again. Boom. It comes down here to moving average. So once you hit moving average, these are the settings. You want to hit the period to be 200. You want your shift to be 0. You want your method to be exponential, and you want to apply it to the close. All right. You also want the pixels to be 4, and you also want the color to be yellow. The reason why I choose yellow is because it's just easier to see. And if it was any other color, it probably would clash with this chart, but I chose the yellow because it sticks out, and that's what we want. All right, so once you put it on there like that, it pins itself to the line like this. Hold on, I gotta get rid of this. That's a price action line that I put to let me know where my support and resistance was, and it broke resistance, but we'll talk about that in another video. Yeah, so this is how it's set up, man, and you could just follow it. Like, let me put this cursor on. You can follow it. The market came up, and it was at a straight path. It lets you know that it's this when it's like straight, it's in range. That's a downtrend. That's a premature uptrend. This is range. All this. Zoom out. Zoom in. Range. Downtrend. Uptrend, and it's on an uptrend right now, and it's getting ready to get back to range. All right, this line can be either support or resistance, so we'll talk about that in later videos about support and resistance, but we just going to solely use this line. So the strategy that I'm going to teach you guys today is the moving average sell and buy trade, a sell and buy trade strategy. Okay, if price, which is you see how it's above here, when price is above the moving average, you want to only take sell trades. When price is below the moving average, you want to only take buy trades. So now this is how you back test strategies. You go back in time. Let's go back. We just spinning back, right? Boom, spinning back. I haven't planned this. This isn't my chart. None of that. See, price. Hold up. Let me back it up just a little bit more. Just a little bit more so you can see. All right. Price down here was in range. You know, you could have profited off the buys, but you would have got more money off the you'd have got quick cash off the sells. You see how it spikes? It takes a little minute to spike up, then it spike. Then it takes a little minute to spike up, then it spike. You feel me? And you also got to know how to use trend reversals. We'll talk about that later in a later video. You know, it came up. Right here would have been the end of your sell trade. You wouldn't have did no more. You would have let the market do what it do, and then it touched this line right here, and it pulled back, and then boom. Right when you touch that line, that signified that you ready to start doing some buy trades. Boom, spike, caught a buy trade, take profit. Let it come back down, spiked. Caught a buy trade, take profit. I would have put another one in, caught a buy trade, take profit. And then boom, it did this. It probably shows signs of trend reversal on an RSI indicator, which we'll talk about in a later video. And then boom, it just fell. This was a nice trade right here. Price came below here. It came below, and then it spiked back up, and it touched the line. Right there, let you know that from here on out, sell trades, sell trade. Boom. It would have did this, and then boom, you would have caught this sell trade here, right? Would have came up, would have caught this. If you real skilled, you know how to catch all of this. And you know, some people in my members group know how to do this as well. They go up, they go up, they go up, then boom, it fell. You would have caught all of that. You let it go up, and you would have caught that quick spike down. Let it go up, caught the quick spike down. You would let it go up. This probably would have been sign of trend reversal here, because right here, 1, 2, 3, 4, 5, 6. This is considered a support line, because price refused to go below it. Right when it started showing you signs like that, that's when I would have put my trade in for a buy, and I'd have let it just rock up. Boom, I probably would have took profit here, and I would have caught this sell. Then I'd have put in another buy. Boom, let it here. When price is hovering around the line, you don't really want to trade that, because that's range. Like I said before, that's all range. Until price came up under that line, that's when you would have put your sell. Boom. Then it would have caught a reversal. Well, excuse me, price came above this line, you would have caught your sell, and then boom, you would have just spiked up and caught all of this. So now let's go to present day time, so you can see what happened in the last day or so. Let's say that price was under, it spiked, would have came off this buy trade here, got your signs of reversal, all right. Then it would have came down, you would have caught that sell. It came up, you would have caught that sell. Although it touched this line, you would have been ready to put your buy trade, right? This is the range, what I was talking about. I would have left this alone and let this do what it do, because it's not profitable when it's near that line like that. Then it came back down. Once it would have crossed through the line, I would have put my sell, would have caught all that. Boom. Got signs of reversal, because previous resistance zones were back here at the top here, right? And if you look where my line is, that's like it entered a previous resistance zone. Below that line would have been over a sold market. So boom, I'd have put that buy, and I'd have caught that too. Boom, it came over the line. Remember what I said? It come over the line. You get your signal, you get your sign that you not that is done. Look. If I match the line up with the previous spikes up over here, we got a resistance zone. Price refused to go above this, and it cracked it maybe 4 or 5 times. Let's zoom in there so you can see. Cracked it like 4 or 5 times. It didn't want to go above there. All right, so you would have put that sell, you would have caught all them pips. If you don't know what a pip is, I'll talk about that later on in future videos, every video almost. But pips is basically, I'm gonna sum it up for you, a position movement. And wherever the dollar is every position movement up or down is called a pip. Okay, so yeah, boom, you'd have caught all that. You'd have got your signs of reversal here, coming here. I would have left it alone, because it's in range and we don't know what's going on. But like I said, I hope this strategy was pretty solid. Excuse the kids in the background, she cutting up. But other than that, I hope this video was love for y'all. If you need any more videos, feel free to reach out to me in the comments or my messages. Love you guys. Let's become better traders, and let's become profitable. Teach one, each one, or each one teach one, as my buddy would say. God bless.